We've already heard from Steven Mnuchin and his side of the Russia sanctions debacle, but that wasn't the only stumble in D.C. this week. On Tuesday, the IRS's online payment services crashed as last-minute taxpayers swamped the website. So I asked the Treasury Secretary about his plans to fix it and how revenues coming in look so far.
It was unfortunate. Part of the problem here is that we have underinvested in technology at the IRS, and this is one of the things I'll be relooking at personally to make sure we have the right technology. We had a glitch in the mainframe which went down. It had an issue that didn't impact most taxpayers. So for most taxpayers who filed electronic returns, were able to put them in with the providers. It would have just been an issue behind the scenes, which, again, we had all 14 million tax returns received by the next morning. It wouldn't have been an issue. There was one issue, which was there was one application that was a direct pay application that went down when the mainframe went down. And one of the things we're going to do is make sure we separate out critical technology so that one impact doesn't impact the rest of the IRS.
Give us a sense, and I know it's early, on what the revenues coming in look like.
It's a little early. We'll be analyzing all the revenues this week. But as I've said, the way we designed the tax bill, I mean, one, as you said, will capture a lot of revenues of people who want to prepay under the higher rates. But the real issue is we've incentivized business to invest. So our revenues will go down in the short term because that's an investment in the economy with immediate expensing and things like that, which will create economic growth that will then create additional revenues in the out years. So what people should really be looking at is the GDP numbers. Where are we, not in any one quarter, but where are we this year? Are we on track to 3% or higher GDP? And if we hit those numbers, we'll more than pay for the tax cuts.
I know you say that that's the number to look at, but people have gotten extremely nervous, especially since the Congressional Budget Office just came out with a very alarming number. And it shows that we're going to have a deficit of $806 billion this fiscal year. And then, of course, we'll leap over the $1 trillion deficit mark 2 years early. And so they're wondering what happened, and do you still stand by your promise that the tax cuts will pay for themselves? Because right now it doesn't look that way.
I do. The CBO numbers use lower growth numbers. Again, that's over the 10-year window. This will pay for itself. In terms of the short-term issue, we are running big deficits. It's something that we will be looking at. I think, as you know, it was a major priority for the president to get military spending this year, which was very critical. And the Democrats required a very large increase in non-military spending to get that over the finish line. And that's something we just can't afford. So that is something that we will be looking at, and we'll have to deal with these deficits, which are spending issues.
But is the CBO that far off? Are they that bad at their job that they somehow see such a wide gap? And it doesn't just go beyond 2020. It goes several years after that.
No, they're not bad at the job at all. They just have different assumptions. And again, the difference between 2% and 3% GDP is literally trillions of dollars.
When you made your assumptions about the tax cuts paying for themselves, had you anticipated this $1.3 trillion spending package that Congress came through with and that President Trump signed? And does that mean that you have to perhaps tweak your numbers slightly and your anticipation?
I would just separate the issues. So when we say the tax cuts pay for themselves, that's looking at what would the government revenue be before and after the tax cuts. That has nothing to do with spending. We started with a deficit before we had the tax cuts. We're now spending more money. That will create a bigger deficit. That's a spending issue. That's not a revenue issue.
Mitch McConnell, the leader of the Senate, told Neil Cavuto no rescission. They're not going to go back on the $1.3 trillion and start nipping and tucking and taking some of that spending out that the president wanted to see. Does that make you concerned?
I know the president and Director Mulvaney are having conversations about those issues. That's something that we'll see how those conversations go with the leadership. I do think on a going forward basis, having the president, having some mechanism that the president isn't just handed a giant take it or leave it deal is important. And we've talked about the line item veto. The line item veto doesn't work in its own construct, but there are other ways of making it work where the president can withhold certain spending, send it back to Congress for an up or down vote that has a similar impact that would be constitutional.
To China. China's a bad actor. Any way you slice it, they are outrageous in how they deal with trade. We get that, definitely. I mean, we've seen it as a business network constantly. When are your next tranches of sanctions or bans on Chinese investment in U.S. technology, and what will your criteria be for which sectors you will ban the Chinese from investing in?
Well, in regards to the investment side, what we're really focused on is critical technology. This is an expansion of the CFIUS process in protecting U.S. technology. But more broadly, our objective with China is to have free and fair and reciprocal trade.